Now that you're in contract, you just received a bunch of disclosures from your lender. I'm going to help you out today and go over each disclosure that comes within that package. My name is Duane Vizinau. I'm a national wholesale mortgage lender and a government certified underwriter. Let's go ahead and get into it. What are the initial loan disclosures? Well, they are required documents provided early in the mortgage process. They also protect the borrower, you, and they ensure transparency. Essentially, all the conversations that you have with your loan officer about the rate, the cost, and everything, these disclosures are going to confirm what you were told is accurate. Now, these must be reviewed and signed before the loan processing continues. You cannot move forward with ordering your appraisal or submitting the loan to underwriting until these disclosures have been signed. The loan estimate. So we're going to talk a little bit about this, but I do have a video that you can watch that explains the loan estimate in detail. So the loan estimate summarizes the key loan terms and estimated costs. So it's going to give you an estimate. That's the key word here, is estimate. This is not the final fees or terms of your loan. That's going to be on the closing disclosure. So right now you're going to get an estimate of what the costs and loan terms will be. And the loan estimate includes the interest rate, the monthly payment, and closing costs. And again, it's only an estimate. And this is what you're going to use to compare with other lenders. So I often get individuals who want to, discuss what the best rate is at the time. But until you get a loan estimate, any lender can tell you what the rate is going to be or what their cost is going to be. It's the loan estimate that you're going to use to really know for sure what the cost, if there's points, what your rate will be. And then at that time, you want to reach out to lenders to compare, only when you have a loan estimate. The next disclosure is the intent to proceed. So this disclosure confirms your intent to move forward with the loan. It doesn't mean that you're saying you want to stay with that lender, because you can still cancel even after you sign the intent to proceed, but it just means you're okay with that lender moving forward with underwriting and possibly ordering your appraisal. Now, this disclosure, it must be signed before the lender can collect fees, except for the credit report. So if you have a contingency on your contract and it states that the appraisal contingency is up in 10 days, in 10 days, you must waive that contingency. Well, the longer you take to sign this form, you are taking away from days to meet that contingency. So be mindful of that and the date that you have set and agreed to on that appraisal contingency. The next disclosure is the loan application, and this is the official mortgage application form. And this is all the information that you input when you did the online application, but you still want to review. And this pretty much details your income, assets, debts, property information, your personal information, your social security number, where you resided. That's all listed on here. Now, you want to make sure that you review this document carefully, and all of the documents for that matter, but this one is specific to you. So if there are any discrepancies, just let the loan officer know so they can correct those. Credit authorization. So this form gives the lender permission to pull your credit. You typically get this form when you do the online application, you get this authorization, but it's still included in the initial disclosure package. Now, this disclosure is required to be signed before the lender can go ahead and lock in your interest rate or approve your loan. Before we move forward, if you're seeking to get pre-approved, there's 3 ways you can access my online application. You can see that barcode right there on your screen. You can also go to my website and Home Loans with Duane. And on my website, there's a ton of information that you can access, as well as being able to join one of my webinars that I host twice a month. And you can go ahead and scan that barcode and join those. And you can also click the link within my bio, and that will take you to the online application as well. The next disclosure is the e-sign consent. So this one allows you to sign the disclosures electronically, and it also speeds up the process. So let's just use the notice of intent disclosure, for example. And that disclosure, we can't move forward with ordering the appraisal or submitting to underwriting until you sign that disclosure. But if you do the e-consent, then once you open it, there's a tracking that shows that you opened it. And then once you signed it, it's instant. The lender knows that you signed it. So then we can just move forward. If you don't do this, then everything must be mailed. You will not meet your contingency dates. You will not meet your close of escrow date. Everything will have to be mailed, signed, received, all of that. That's lengthy. Please make sure to do the e-consent. The Home Loan Toolkit, which is just for purchases. Now, this is provided by the CFPB, the Consumer Financial Protection Bureau. They give a ton of information if you'd like to go to their website about the home buying process, but they include that toolkit for you, and it just helps you understand the mortgage process and compare offers. Affiliated business disclosure. So this disclosure will let you know if the lender has any relationships with any other services that are provided on the purchase. So if they have a relationship with the appraisal company or the title company, then they must disclose that. And this just makes sure that you're aware of any potential conflicts of interest. Other common disclosures is the privacy notice, and this just makes sure that your information is private. Then there's the fair lending disclosure, making sure that you're treated fairly. And then there's the anti-steering disclosure. As a broker, I have to provide that to you. And that just makes sure that I'm not steering you to one program. I'm giving you all options. I've given you the lowest rate option, the highest rate option, all different options. And I'm just not forcing you to take one program or one interest rate. Then there is a state-specific disclosures depending on where you live. Every state has their own disclosures as well. All right, what should you do when you receive these disclosures? Well, you want to read each one carefully, thoroughly, and then you want to ask questions if anything is unclear. And this is, again, why it's so important to work with the loan officer that's available to go over these disclosures with you. I personally like to do Zoom calls when I go over like the loan estimate, for example, because you're trying to trust somebody talking about numbers. And unfortunately, some individuals, when it gets to this moment of talking rates and payments and commissions, there's a little bit of uncertainty. So Zoom calls for me, they add a level of transparency. You can see what I'm talking about. I can go over each one line for line. So just make sure you're working with a professional that takes time to answer all your questions. And then make sure to respond promptly. And that's, again, because all of these disclosures are required to be signed to move forward. And lastly, you will need to sign every single disclosure you get. You can't skip. So let's say that there is an error on the loan estimate or the 1003, the loan application. Well, you still have to sign that one. But what you're going to do is let the loan officer know that these are incorrect. And then the next set that you will get will have those corrections. But you are not able to move forward at all without signing every single disclosure you receive. But know that you are not bound to the contract or to the lender until you wet sign. So everything that's electronically signed, and this is in the state of California, I'm not sure about every other state, but wet signing is when you're saying that you want to move forward. So all the disclosures that you e-sign, you can still back out should you choose to. There you have it, the initial loan disclosures. And if you do have some disclosures you'd like me to go over with you, go ahead and scan that free 30-minute Zoom consultation. It doesn't cost you anything. And hey, if you're getting a good deal, I will let you know. I'm not that type of loan officer trying to steal deals. But if you want to make sure that you're getting a good deal, the only way you can do that is by talking to more than one loan officer. If you're just talking to one, then you'll never know if you're being treated fairly. So go ahead and scan that. Also, please like and subscribe if you feel like this information was useful, and I'll see you on the next video.